Hello, welcome everyone to this webinar hosted by the Asia Society Policy Institute's Center for China Analysis, or CCA for short. I'm Neil Thomas. I'm a fellow on Chinese politics at CCA, and I will be moderating our conversation today on one of the biggest events in the Chinese political calendar, the two sessions. For those who don't know or who need a quick refresher, the two sessions are the annual meetings of China's Parliament, the National People's Congress, or NPC, and of the main United Front organization, the Chinese People's Political Consultative Conference, or CPPCC, for mercifully shorter way to say that. The two sessions won't end until next week, but we're meeting today because the big reveal already happened yesterday. That's when Premier Li Qiang delivered his second government work report to the opening ceremony of the NPC. And also Xi Jinping, China's top leader, has already made most of his remarks for this year's two sessions, talking to NPC delegates from Jiangsu province yesterday and to a group of CPPCC delegates earlier today. And this year's two sessions is coming at an interesting moment. China is navigating growth difficulties coming out of the COVID pandemic still. It's navigating confidence crises amongst consumers and the private sector, whilst it's also facing new trade and technology tensions with the United States and an increasingly uncertain geopolitical environment with Donald Trump's return to the White House. But we've also seen some more positive signs emerging this year, especially around the DeepSeek AI breakthrough. And Alibaba just released another model recently that's getting a lot of attention. So Li Qiang's report and Xi Jinping's remarks are valuable because they offer us some windows onto Beijing's thinking about how to steer the country and the economy through the year ahead. And to discuss all these issues today, I'm thrilled to be joined by an incredible panel of speakers. We have Michael Hirson, who is a CCA Honorary Fellow on Chinese Economy and the Senior Managing Director and Head of China at 22V Research, macro investment advisory in New York. And he was previously the practice head of China at Eurasia Group and the U.S. Treasury Department's chief representative in China. And also we have Lizzi C. Lee, who is a CCA Fellow on Chinese Economy and the newest member of our full-time team. So we are especially excited to have you here today, Lizzi. She previously earned a PhD in economics at MIT and worked as a journalist for the New York-based independent Chinese media outlet, Wall Street TV. And finally, Guoguang Wu is a CCA Senior Fellow on Chinese politics and a Senior Research Scholar at Stanford University's Center on China's Economy and Institutions. He is one of the leading scholars of Chinese elite politics and recently wrote an excellent paper for CCA on the rise of CCP young elites and Xi Jinping's Tsinghua New Army. Now, the way it's going to work today is that we'll start with a conversation between myself and the speakers, and then we will get to a wide-ranging Q&A with the audience. So for everyone tuning in, you should be able to see a Q&A button in your Zoom windows, and please feel free to ask a question at any time of the conversation, and we'll try and get to it at some point. So without further ado, let's get started on the two sessions. And I want to turn to you first, Michael, and talk about the big headlines that always come out of the government work report every year, which are these annual economic targets. Yesterday, Li Qiang announced that GDP growth will be targeted at 5%, the fiscal deficit ratio at 4% of GDP, 2% inflation, 5.5% unemployment. So what do these targets tell us about China's economic priorities this year? And what kind of fiscal policies and monetary policies can we expect to be coming?
Sure. Thanks, Neil. Very excited to be with my distinguished fellow panelists here. Very interesting set of targets announced in the government work report. A little bit of a split screen, if you will. So I would say on the one hand, you have some pretty clear signals that China's leadership recognizes that a higher rate of growth or sustaining a high rate of growth is important for social conditions, for the other areas that are important to the leadership. And you see that in the 5% growth target, which is relatively ambitious, given the headwinds coming from potentially from U.S. China trade risks. You also saw, as you noted, an increase in the official fiscal budget deficit from 3% to 4%. That's the highest level in many years. So it's another signal of a desire to do more to sustain growth. And then there was a focus on boosting domestic demand as the top priority for the year. On the other hand, if you look at the details of what was announced, a sort of full stimulus outlined, it was not particularly aggressive in the details, and probably not enough to secure that 5% growth target, unless a lot of things go Beijing's way, including with U.S. China trade risks. So I think it adds up to a sense by the leadership that they want to refocus on growth and development, but still a desire to do only as much as necessary in terms of stimulus to get there. And there's really two implications for that, I think. One is that we're probably going to need, Beijing will need more stimulus later in the year in order to secure that 5% growth target. And this will be an interesting question of how quickly policymakers come in with that support. There was a tone of being proactive at the NPC, but we've also seen China's leadership over the last 2 years kind of fall behind the curve when it comes to providing support as necessary. So the second implication is, in terms of just where we see the strength of the economy this year, I think it's going to stay fairly subdued, given that there is not a very strong stimulus surge. So we'll probably get to 5% growth in terms of real GDP by the end of the year. But I don't think we're really talking about a very strong recovery on the demand side of the economy. And I don't think that China's likely to break out of the deflationary dynamics that it's in right now. So I'd say that's where we are in terms of where the government targets lead us. But of course, there's a lot more to think about in terms of the priorities, including the industrial policy and tech side, which I know Lizzi will discuss, and I think still continues to be really the main priority of Xi Jinping and the leadership, rather than boosting the demand side of the economy, despite the commitment to do so as the top priority in the work report.
Just a follow-up there. So we got, this announcement that there'll be, a record level of bond issuance for local governments, 4.4 trillion yuan rather, increase of 500 billion. We've got 1.3 trillion yuan of these ultra long special treasury bonds. That's up from 1 trillion, the first issuance last year. There's an extra 500 billion yuan to help big state banks to recapitalize. And this, broadly in line with expectations, but definitely on the lower side. So, I mean, given the pressures facing the Chinese economy, given, as you said, maybe this isn't enough to get to 5% unless everything goes right, why wasn't there more stimulus? Can you expand upon what's holding Beijing back, especially as we got some Chinese economists, in official advisory positions ahead of the two sessions, suggesting maybe we should have 3 trillion yuan of special ultra long treasury bonds. Maybe we should have 10 trillion yuan. Like, that's the kind of scale that a lot of Chinese economists in China feel that the economy needs. So why so little given the context, even though this is a record level of fiscal stimulus?
It's a fascinating question, and there's different elements to it. I think on the part of the top leadership, on the part of Xi Jinping, there's a real desire to stay disciplined and focus on the long-term policy agenda. And Xi is concerned that giving in to too many demands for stimulus would exacerbate local government debt risks, creating the potential for a financial crisis down the road, and would also leave China with not enough policy room to respond to developments. Now, those developments could include a very nasty 4 years dealing with Donald Trump. So kind of using all your fiscal capacity now to stimulate the economy when you could need to turn around next year or the year after with really aggressive support strikes, I think, Xi as being, potentially foolhardy, sort of caving into short-term expediency and losing sight of those long-term targets. Then there's also this interesting political economy question of the Chinese leadership wanting to direct resources to the areas that it thinks are most critical for China's trajectory, which very much involves, I think, the industrial side of the economy, industrial upgrading, tech, innovation, AI, semiconductors, et cetera. And still really a reluctance to give out cash to households, which would be, I think, now the majority of probably Chinese policy advisors, economists would say this is something that the Chinese economy could use very much, but doesn't still align, or it's aligning only slowly with where the leadership sees the priorities for where it wants to go.
Yeah, it's a fascinating dynamic, and I think that it'll be a watch point across the year ahead, right, in terms of if and when more stimulus will happen. Just want to stay with you briefly, Michael, to follow up on a point you made about industrial innovation, that kind of broad set of tech issues still being this really important priority, because one of the biggest watch points for this year's work report and the two sessions more broadly was whether there'd be movement on consumption policy. And it's been a big issue. Obviously, sentiment is not great. There's influence from the property crisis or correction, negative wealth effect on households. And there's, again, a lot of arguments in China for rebalancing away from investment and towards consumption. So I wonder if you can just explain to us briefly, what the issue is with consumption in China, what was new in the work report, and whether this will make much of a difference in boosting consumption levels in China.
Sure. I mean, you can, I think, look at the consumption issue on two different levels. There are the structural reasons why consumption in China is not very high. That relates to income distribution within the country, the fact that the safety net is still underdeveloped, so Chinese households save at a high rate. There's a lot of structural issues that are kind of the long-term dynamics. Then there's the current macroeconomic situation and the reasons why that is contributing to weak consumption. I'd say really the two big factors there are, number one, the job market remains very weak in China. Still hasn't really recovered from the pandemic and from the loss of construction jobs coming from the property sector. And then two, housing prices are falling. And housing is the most important asset for Chinese households. So if the asset values are declining, households feel less confident spending. What we saw at the two sessions was just the door cracking open still very gradually to doing more direct support for consumption. So 300 billion to fund a trade-in program for appliances and some other consumer goods, an expansion of a program we saw last year, and a small, pretty modest amount of direct transfers to households. But set against those macro challenges of a weak labor market and falling housing prices, I don't really think that this is going to be a very powerful boost. So it's still a very gradual movement of the leadership towards being comfortable with doing more direct support for consumption. We're not really there yet in terms of a very forceful push.
Yeah, it seems like positive moves, but still very much incremental rather than big structural changes. But very slowly moving in the right direction, perhaps. Wanted to turn to you now, Lizzi, on another of the major focuses of the commentary and the conversation leading up to the two sessions, which was Beijing's attitude towards the private sector and towards entrepreneurs, private firms, because there was this very rare symposium that Xi Jinping hosted with a bunch of private entrepreneurs, tech titans like Jack Ma and Ren Zhengfei, the CEO of Huawei. That was February 17th. And that created a huge amount of attention, a lot of buzz about maybe China's turned the corner on the tech crackdown, and some excitement, but also caution, given that there haven't been a huge amount of new policies announced yet. But we have just had Li Qiang's work report. We've had Xi Jinping discuss private enterprises with the NPC delegation from Jiangsu yesterday. So what have they been saying? And does this represent a new approach? And will it make a difference on the ground for businesses and investors in China.
Right. Well, thank you so much, Neil. I think this is indeed the most significant message that's coming out of the two sessions. Just one minor point before I answer your questions. Some commentators, are criticizing this year's, government work report for lacking of details. But I think it's important to understand that the government work report is a high-level agenda-setting document. It's not supposed to have granular details. I think to actually see what's going on the ground, first, you look back to the provincial two sessions to see what each, local government or province is actually implementing or, actually doing on the ground. And then you look at the follow-ups. So that's just sort of a general comment before I answer your questions. And as you point out, yes, Beijing did make a big show of reassuring the private sector in this year's two sessions based on the information we see so far. First, there's Li Qiang's government work report, which hits all the expect notes, right? Protecting entrepreneurs, cutting red tapes, and I think really importantly, stopping predatory law enforcement. The colloquial term is far-seas fishing, which refers to this aggressive cross-province crackdowns on private businesses that really terrified many entrepreneurs. And also importantly, Li Qiang specifically acknowledged the damage of evolution, 内卷, this cutthroat competition that's really crushing profitability. And he also promised to clear government debts to private firms, which is a nod to the cash crunch that have left many businesses struggling. But I think the strongest signal, as you point out, came from Xi Jinping himself when he spoke to the Jiangsu delegation. He explicitly couched the private enterprise symposium as a spirit, right? 民营企业家座谈会精神. And as you know, not every meeting with Xi Jinping earns this level of party codification. So when a meeting is enshrined as a 精神, as a spirit, it's really a top-level directive that will be studied and implemented across the system. It's also a signal for consistency. So when something is a 精神, it's not going to fade away very fast. You're going to hear it repeatedly, at least sort of in rhetorics and in state medias, and also be sort of propagated throughout the bureaucratic system. And I think that really makes this shift or recalibration, which I'm going to talk about later, really impossible to ignore. But I also wanted to sort of caveat that statement a little bit. It's not a sign that Beijing is reversing its approach to private economy. It's not a sign that Beijing is now, calling for animal spirits, losing control, right? It's not that. Importantly, all this reassurance to the private sector entrepreneurs is still framed under this familiar term, 两个毫不动摇, so two unwavering principles, which is basically party speak for, keeping the state dominant, using the state to guide private enterprise. And I think that's a really important. It's not a reversal, it's a recalibration. Beijing doesn't just want the private firms to recover and start to innovate and invest. It also wants them to fall in line with party priority. And I think the clearest example we see is in tech, right? If you look at Black Myth Wukong, DeepSeek, and China's latest AI breakthroughs from Alibaba, as you point out at the top of the meeting, they're not coming from state-owned enterprises. They are from private firms. And with U.S. China competition over high tech, now the party really needs them to be aligned with national priority. So I think that's important to note. And also, you see sort of leading up to the two sessions, there's this coordinated kind of propaganda campaign, right? The state media is basically working overtime last weekend to rewrite the narrative. Qiu Shi had an article in Xinhua has a long commentary framing Xi Jinping as a long-term supporter of private enterprise. Xi Jinping's past record in Fujian and Zhejiang was being repackaged as proof that today's AI boom, China's tech breakthrough, was basically an extension of his past policies. Well, incidentally, both Game Science Studio, the maker of the Black Myth Wukong game, and the innovator behind DeepSeek came from Hangzhou, which is a city in Zhejiang. So in that sense, all of them might be related, but the message is very clear. Xi Jinping himself is not admitting mistakes. It's a natural extension of his past success. And it's not a reversal of what the state has been doing. It's a recalibration of this relationship. It's not about unleashing the spirit of the private sector. It's about repurposing or realignment with the state. And I think I'll just stop there.
Yeah, I think that's a really important point and really important nuance to the discussion about this issue, which can cause people's tempers to run high who've been following this or trying to work in China for some time. But I'm curious as to whether you've detected in either the government work report or some of the provincial work reports that indeed you highlighted as being much more specific policy plans for how this high-level sentiment is going to actually play out on the ground. Are there any new policies that are coming down the line to help private firms or entrepreneurs? Like what's going to be different this time, as far as we can tell, or is it too early to say?
So I think it's still too early to say. I think what we will see is 民营经济立法, so more legislation to kind of to codify protection of private entrepreneurs sort of in terms of law and regulations. Then it will be sort of deployed throughout the system. But I do wanted to point one thing out. There's another term which I think is really significant in this year's coming out of this year's two sessions, which is this idea of 因地制宜, right? So different localities, different municipalities, different provinces, they should have their own policy initiatives. And they're almost locking this horse race to see who can attract the best private firms, who can come up with the next DeepSeek. I think that's a really important thing to be on the watch out for. China has always had this 地方锦标赛 model, so local championship model, but previously, they were basically competing over GDP growth. And now I think next stage of China's bureaucratic performance evaluation, they will be competing on something else, whether it's tech, new quality productive forces, it's who can attract the most, the best private entrepreneurs. I think that's something that we should be on the watch out for in terms of what's actually playing out at the local level or on the ground.
Great, I think that's super useful, and I'll highlight another green shoot coming out of the government work report that Li Qiang delivered, which was circling back to this pledge in the third plenum to pursue fiscal decentralization and allow local governments to collect more revenues from consumption taxes, and perhaps in the longer term to gradually shift the incentives of local governments to encouraging consumption rather than just production by potentially expanding the consumption taxes as part of the overall tax base. So these policies have been flagged at a high level. They don't always get implemented as aggressively as we might want, and that's kind of where the political will comes in the next few months and years. Like, is this something that's the top leadership are going to decide as a priority and something they're really going to be monitoring and evaluating local governments on? And so, it's good to see these signals, but as you point out, implementation is really the key in the year ahead. But there's also another part of your analysis of Li Qiang's work report that I think is super interesting, Lizzie, that I want to spend a bit of time in, which is a shift you've identified in economic policy making, not so much the what, but the how, which is focusing on speed and decisiveness rather than kind of gradualism and incrementalism. So I wonder if you can just give us the context of what was said and then what was actually said, and what might it mean in practice for people who are following economic policy making in China.
Right. So thank you so much. I think that's also a critical message in Li Qiang's government work report. It's probably the most memorable quote from Li Qiang's sort of hour-long speech, which is not usually very exciting. So Li Qiang's message in the government work report, I think, is the most important one, is this tone shift, right? There's this one line that particularly stood out to me in English. Li Qiang said, when introducing and implementing policies, we need to do so as early as possible, or on the side of being too early, going too big, rather than too late. We need to race against a variety of uncertainties. And once a decision is made, we need to go all in, provide full support in one go. And for this audience, that's a clear break from Beijing's philosophy in terms of economic management. In fact, Li Qiang himself previously advocated this approach, 固本培元, which is a traditional Chinese medical concept that means, we need to strengthen the fundamentals, we need to go slow, and we need to go steady. There's no rush. We don't need to, basically create more bubbles in the economy. We need gradual, measured intervention aimed at reinforcing long-term stability rather than going after immediate impact. And this message is just the opposite of that. So like what's the reason behind this shift? I think the reason is past small reactive incremental policy adjustments just fizzled out. They were not substantial enough to restore confidence in Chinese economy, right? We saw, minor tax cuts, small regulatory tweaks, stimulus measures, small sort of, buy one get one, consumption coupons. Well, when they were first introduced, we saw sort of spike in expectations, spike in economic activities briefly, and then they just faded as businesses and investors are still kind of in this wait and see mode to see what will follow. So there was no decisive break. There's no decisive uptick in sentiment. And now we know China, the economic recovery since COVID is still very fragile, and confidence level is still very low, whether it's consumers reluctant to spend on big ticket items or companies hesitant to invest. And we know, in China, perception matters as much as fundamentals. If you look at the fundamentals, they're actually not that bad. But this vibe, this sentiment, this level of confidence is still very low. I think that's why we see such a direct reference to restore confidence, or this reference to market psychology in the government work report. And in the presser after Li Qiang's briefing, a state council official actually put this very explicitly. He used a term, kind of a tongue-in-cheek expression among stock market traders, right? 三根阳线改变信仰. So if you see 3 bullish candlesticks, you will change your religion, which is an explicit acknowledgement that asset prices and policy signals, they can shift real economic behavior, whether it's people feel wealthier, more optimistic. Well, if the sentiment itself is restored, they're more likely to spend, invest, take risks, which brings me to another point. This is why stock and property price stability, for the first time in the history of China's 2 sessions, are being framed as part of the macro policy toolkit. So, this is really a significant change. I don't think analysts pay sufficient attention to this part. Asset price itself, confidence itself, is now being framed as an economic variable. Management of market expectation is being framed as a key priority. So this is something that I just wanted to highlight, and we can talk more about whether we were going to see actual uptick in confidence. And my answer to that question is it's not really about what Beijing says or even Beijing does. It's more about how much buy-in private entrepreneurs are gonna do, right? Are they gonna believe the message? Are they gonna hedge? Are they still hesitant? So it's kind of a ongoing negotiating process between the private sector and the state. But I think from Beijing's point of view, the recognition is very clear. Market expectation itself needs to be actively managed.
Yeah, I think that's potentially good news for investors in China, and also connecting it back to what Michael was saying earlier in the conversation does suggest that if we see an escalation in U.S. China trade and technology war, that Beijing may not be hesitant in responding to ensure that this, nascent but certainly emergent economic recovery keeps going. And just to reinforce your point as well, there's been a lot of very positive affirmations in Xi and other leaders' statements about the September Politburo meeting that preceded this, first tranche of monetary stimulus and eventually led into fiscal stimulus last year. And that's when the stock market roared back to life and started exiting recession correction territory. And now Chinese stocks have been some of the world's best performers this year, and it's obviously given a boost more generally to confidence in the Chinese economy. So that may be something that they're looking to sustain. But obviously, there's only so much that one country's leaders can do to control stock prices. So might be setting themselves up for some more interventions needed if indeed the international political environment deteriorates as we get further into the Trump presidency.
Right.
But we can get into all this in the discussion and questions, hopefully. But I do just want to turn now to Guoguang to zoom out and get some of the context for this week-long session of meetings. There are all of these policy announcements and reports coming out. But this is coming towards the middle of Xi Jinping's third term as General Secretary, the middle of Li Qiang's first term as China's Premier. So I'm curious, Guoguang, if you can just help outline for us what is the political context of this year's two sessions. Is Xi Jinping still, all-powerful? Is he being affected at all by the economic difficulties that China's experienced? Is that something that he's worried about? And is it politics in Beijing that might be motivating this increased focus on growth this year? If you just help us unpack these political dynamics, that would be, I think, really important context.
Good question. Thank you for that. Based in China, but talked about it's basically political routine to emphasize economic issues. But this year, the emphasis on economic issues is particularly, highlighted. So many different things paving the way to the two sessions. Our colleagues mentioned many of them. Also, I like to highlight the publication of Xi Jinping's work on economic works. And also, yes, Xi Jinping's, series speeches on economic issues. So is that any, signal indicating the Chinese government's refocus on economic development rather than as previously, emphasized on security issues? Basically, my answer is not. So as you just highlight, political context is very important. So I think the current emphasis on economic growth in China, as evidently showed by the two sessions, basically stimulated or motivated by China's preparation for the forthcoming trade wars with the United States. So China already felt the pressure in this regard. So China needed to prepare better, healthier economic development to fight against that. So basically, I don't think there is any fundamental shift in terms of political focus or political rationale. But there are some policy changes very important. I want to add only one, which is about central-local relations. So from yesterday's Xi Jinping's speech at Jiangsu provincial delegation, he particularly emphasized the role of so-called economically powerful provinces, their leading roles in promoting Chinese economic growth. So that means the Chinese leadership has somehow shifted back to the policy promoting regional disparity for promoting economic development. So we know that when Xi Jinping came into power, he always emphasized things like common prosperity, emphasized to reduce actively regional disparity. But those policies are not so good to promote economic growth. So it seems that technically he shifts back to these kind of things, old model of stimulating economic growth. But these kind of technical shifts of policies, the basic background I would emphasize nothing to do with change of domestic politics. I think Xi Jinping firmly controls Chinese politics, particularly the party state machine. And this kind of technical shift of policies also help to indicate his firm control of policy making. That means if he shifts back to something old policies, his political status would not be questioned, would not be challenged. So he had this kind of, power to do that. So the basic political context would be China's relationship with the United States, particularly in economic size, the two countries' economic relations.
Great. I think that's a set of fascinating points that I really haven't seen covered in much of the media or even academic reporting on the two sessions. So thank you for sharing those perspectives. And just to follow up on what you said was, the major consideration around some of these changes, which is U.S. China relations. The U.S., I think, obviously still looms large in China's foreign policy, and there's still a lot of rhetoric we see from Xi and other leaders about how challenges to China's economy from the external environment are deepening, are increasing. We've seen more of that language since Trump's election last November. So it's clearly something that's on policymakers' minds, as we've touched upon kind of throughout this conversation. So I just want to kind of focus, specifically on U.S.-China relations, Guoguang, and ask, how do you think Xi will approach diplomacy with Trump going forward this year? And how much do you think he's worried by U.S. tariffs and sanctions and export controls, other things that that the United States might do towards China? Like, does he want to resist and push back, or does he want to meet with Trump and do a deal? What's your thinking about U.S.-China relations in the year ahead?
Yeah, before talking about Sino-U.S. relations, I guess we need to talk a little bit about the general geopolitics or world politics. So I think Xi Jinping would be happy to say the U.S. European relations with a lot of troubles. So, but regarding Sino-U.S. relations, I think Xi Jinping worries a lot, not really about what has already happened, but worries a lot about what has not happened so far. So I think two things for the Trump administration in terms of foreign policy, two things are not so widely expected regarding China. First, people would expect that China policy would be focused, or at least priority, for the second Trump administration's foreign policy. But it seems that so far it's not. So the administration has come into power for more than months, so it didn't do a lot on the China policies. So would that be meaning something, a bigger storm coming in the future? So if we don't worry about that, but Xi Jinping must worry about that. The second unexpected thing was actually, how to say that, it's a relatively moderate tariff over China, and the gradualist approach from the Trump administration in this regard to manage that. So what would that mean? I think Xi Jinping and Chinese leadership they worry about that, and also they spend a lot of time to interpret that. So comparing to the U.S. relatively moderate policies over tariff, over China, it seems that Chinese responses were really harsh and really hardline. So day or before yesterday, yesterday or before yesterday, the Chinese foreign ministry spokesman, said something about trade war between China and the United States. And he also mentioned that whatever wars. So that was really harsh. So trade war is trade war. Why you mention something beyond trade war, military war? So I think this is not only emotional response, but that seemingly indicated that the Chinese side tried to gain some bargaining chips, tried to lift its profile to gain some advantage for the future, negotiation with the United States over tariff issues. So I think uh, this hardline attitude could indicate China is preparing to do negotiation with the United States, to make deal with the United States, but really want to gain some more with the deal making. So that's why China says something so harshly and try to tell the American side, so we could do everything. So if you like to do that.
Great. Thank you, Guoguang. Now I'd love to bring in our audience. So if you have a question, please submit using the Q&A tool. But first, I just want to take this really hot button issue of U.S.-China relations and just get perspectives from Michael and then Lizzi as to where you think this is going and how much do you think this actually matters for China's economy this year?
Sure, I can start. I mean, I think it does matter quite a bit. I think what is confusing for China's leadership and for all of us is that we're seeing things really develop along two tracks at the same time by the Trump administration. One track is increasing tariffs on China, and in only 2 months, Trump has already increased tariffs, U.S. tariffs on imports from China more than he did in his first term. And on the other hand, exploring a deal, because I think he is quite interested in that. I think one of the problems that Beijing has that Guoguang alluded to is trying to understand also what Trump wants. And that makes it difficult to make concessions on an issue like fentanyl when they're trying to build up leverage. So until they have a sense of what's on the table with Trump, it will probably be something of a standoff in the near term. But I do think we will move into a phase where there will be exploration of a deal. But at the same time, I don't think the tariff threat is going away, even as the two sides explore a deal.
Great. Lizzi, did you want to come into this U.S.-China relations question before we go to audience questions?
Right, so I don't have much insight to add. I would just add a reference. Bloomberg just published a long deep dive. I think the title of the article are in lines of basically how Trump is prompting China to rethink its approach to economy. The idea is external uncertainties sort of reinforces Beijing's pivot to focus on domestic demand and domestic consumption. I think that's going to be a theme or another motivation behind this, sort of messaging shift that we saw recently. I would just add that, and the Bloomberg report has a lot of fascinating details. I highly recommend that piece.
Thanks, Lizzi. Maybe just staying with you, actually, we have a question from the audience concerning the tone shift at this year's 2 sessions. So the question is, how much of this is also aimed at foreign companies who are doing business in China or trying to enter the Chinese market? So will this push benefit international companies as well as Chinese companies?
I think absolutely. And in fact, I think just 1 week before the 2 sessions, we saw significant opening of China's critical sectors, including telecom, healthcare, and sort of previous sectors that are considered strategic but were previously largely closed to foreign investors. I think there's a real urgency at Beijing leadership to sort of re-attract or to court back some of the FDIs that were previously fleeing China. So there's a real urgency on that. But as is typical with China's political economy, I think implementation and execution is gonna be the key, right? How those initiatives, how those calls for actions are gonna play out at the locality level, because more often than not, when you're dealing with Chinese bureaucrats, you're dealing with those bureaucrats at the local level, at the provincial level, not at the central level. So I think that's important, which also brought me to another point I think is quite significant during Xi's talk to the Jiangsu delegation. If we look at Xi's message, there was also this call of, once something is decided at the central level, you guys must implement that to the word, 不打折扣执行, which, there are two ways to interpret that. First, it's a focus on execution. It's not just, what we intend to do, it's how you guys actually do it. And that's also kind of a side acknowledgement that there's actually some kind of hesitation, some kind of slow in movement at the local level when it comes to how policies are actually implemented at the local level. So I think sort of as Guoguang pointed out, so watching that tension between central government and local bureaucrats is going to be fascinating, and that also determines how those policy initiatives, whether it's friendly message to foreign investment, foreign businesses, is actually going to have a real impact on the ground.
Great. Lots of watch points coming this year. Michael, just wanted to see if you had anything to add on this issue of foreign investors and foreign companies in China. It's obviously something you've done a lot of work on. And is there anything new here? How important do you think this is going to be going forward?
I think it's important. I think Lizzi captured it well. Of course, one of the key issues really is going to be, are these measures powerful enough to offset the pressures of kind of de-risking that are coming from foreign investors in China, pressures coming from their home governments. In the case of the U.S. Trump administration, of course, just put out a very hostile document in terms of its views towards Chinese investment a couple of weeks ago. So there is still this question of how much is on balance, how much does the policy effort from Beijing counteract what are these stiffer headwinds coming on the external side?
Great. And just staying with you, Michael, for another question that's just come in. So it's saying, given the lack of big stimulus and the increasing importance of some of these common prosperity policies, should we expect changes in tax policy coming this year? I touched on this earlier, but given your read of what's happened at the two sessions and kind of the broader evolution of Chinese fiscal policy, do you see some tax reforms actually coming? And they've often talked about, but there's been a considerable delay in things like the property tax and the third plenum promises last year. What do you see as being the future of kind of tax reform going forward?
It's a good question. I didn't focus on this for the NPC, so I wasn't looking in particular for it. I didn't see much that stood out. I think where we are basically is there are some important tax reforms that are on the table for the long term that basically are meant to give local governments more resources and to help accomplish some policy goals. But the problem right now is the economy, and in particular the property sector, are in such weak shape that there is, I think, limited willingness by Beijing to push these through in an aggressive way. So I may have missed something, but I think for now, the emphasis from fiscal policy is more transfers from the central government to local governments, and the central government stepping up a bit in terms of doing more borrowing to fill the gap from local governments, while the tax reforms will happen on a kind of medium-term trajectory.
Great, thank you. Just want to turn to some foreign policy questions that are coming in. and Guoguang. I'm wondering if you can help us to kind of unpack some of this grand strategy. So a question that I've seen a lot in DC and that's on people's minds all over the world is the question of this so-called strategic triangle between the US, China, and Russia. And we talked a lot about the implications of U.S. China relations for the Chinese economy. But given how topical this is, wanted to ask you this question about, is Beijing concerned that Trump seems to be driving a wedge between China and Russia? So he's catering to Russia in the Ukraine war. He's helping, reportedly, the US to negotiate with Iran. So do you see this as being a reverse Kissinger in action? Will China be next in terms of the target of US-Russia relations? How do you see this issue?
Good question. I think yes. I mean, Beijing is much concerned with that. Yes, but to me, I don't think there is huge possibility of Kissinger reversed actively the 1971 regime reversed. Basically, because in early 1970s, the Soviet Union posed a direct and huge military threat to China. So that was the major motivation for Mao Zedong and China to have this welcome Nixon to visit Beijing. Today, China doesn't pose any military threat, any direct threat to Russia. So Russia has no such powerful motivation to break down with Beijing to make friends with United States. And also in economic connections, China and Russia, they are highly complementary with each other. So I think Russia needs China's economic connections. And also very importantly, I don't see any fundamental differences between Moscow and Beijing in terms of political, values or ideology. So we know that was a major factor. I mean, ideological confrontation. That was a major factor driving Moscow and Beijing apart from each other, eventually leading to the so-called strategic triangle in early 1970s. So Beijing has a lot of reason to worry about that. Make sure to let Beijing be so you don't need to worry so much. But if Moscow tried to use this opportunity to lift its bargaining chip to deal with Beijing, that's reasonable. They don't have full trust with each other, so they have small game to deal with each other to try to gain advantage in dealing with each other. At this moment, with Trump's policy toward Russia, it seems that Moscow really gains advantage if they like to use this to deal with Beijing, but they know that so they need Beijing to be a major chip to deal with Washington D.C. also. So in this sense, we really see some kind of a strategic triangle, but I don't think this strategic triangle is actually equal distance among three poles actually. So the distance between Moscow and Beijing is the shortest. That means they are close to each other. So they have problems with each other, but basically I don't think their alliance can be actually dissolved actually. Yeah.
And that's a fascinating perspective. So it is a strategic triangle, but each side is a very different length depending on which partnership you're talking about. Just pivoting the conversation back to the economy is a great question that's come in about deflation in China, which has obviously been a major policy concern, both at home and abroad over the past couple of years. So the question specifically is, how much of the deflationary pressure we're seeing is driven by this Nejuan phenomenon that Lizzie briefly discussed earlier. So, Nejuan, obviously this kind of intense competition that produces decreasing returns. So Lizzie, maybe if you want to take this, and it'd be great to get your thoughts, Michael, on the Nejuan phenomenon contributing to deflation. Perhaps also more broadly, what's your feeling about the outlook for price levels in China going forward this year?
Right. And, I think it's a critical question. And in fact, if you look at the government work report, there are two severe issues Li Qiang point out. One is, lack of consumption, basically, low level of consumption. And the second is price pressure. So this is definitely top of Beijing's concerns. In terms of how much of it is related to evolution price wars, I wouldn't say it's a huge contributor. Evolution price war is a huge contributor. What's really contributing to this sort of down spiral price cycle is still the lack of economic activities. So several things I think we sort of pointed out earlier in our conversation. First, there has to be a major boost in consumption, probably not just from the product sector, but also from the service sector. If you look at the provincial two-session conference, every single one of the 31 provinces had some new policy initiatives to boost the service sector. So whether it's, attracting more cultural events, sporting events, tourism, expanding service product offerings, et cetera, I think service is going to be a major watch point for how to actually boost consumption. When we think of boosting consumption in the U.S., we think of handing out a check. But, that's definitely not the kind of approach Beijing is going for. It's more about sort of extending the diversity of product offerings and upgrade sort of expand what's available in the market. I think that's quite important. And there's a lot of potential in terms of China's service sector. There's a lot of room for expansion. So that, and also a depressed asset price contributing to deflationary pressure, which I think is why, as I mentioned, property market price and stock market price are explicitly framed as key policy variables. So I think we're going to see a lot of movements in terms of policies, regulations, new policy initiatives coming from those two sectors because, asset prices, important wealth effect. China's property sector, we don't expect it to return to the go-go days, but definitely it's still a substantial part of household wealth. And I think we'll see some real movement there.
Yes, I think that's a great point. I don't think it's really about the Nejuan excess capacity. It's more the underlying weakness of domestic demand. I think this issue is really where you get to the gap between Beijing's desire to keep growth up at a fairly high rate and the amount of oomph, the amount of stimulus backing behind it. I would say my sense of where most economists are within China is that deflation is where policy needs to be more bold. And where incrementalism doesn't get you out of some of the vicious cycles that happen once deflation takes hold. So I think it's going to be a real challenge this year, this all of what we discussed, this, higher growth target, somewhat higher fiscal spending, a pledge to be more proactive. Deflation may be kind of where the rubber meets the road on this. But I would say thus far, I haven't seen signals that the policy response is strong enough to really decisively break out of the deflationary dynamic.
Great, thank you. So we're heading towards the top of the hour. So we've covered a lot today, from economic policy to elite politics to U.S.-China relations. But as we wrap up, I'd like to ask each panelist just a lightning round question, your very brief responses. So the question is, in 1 year's time, at the next two sessions, do you think the overall vibe about China and the Chinese economy will be more optimistic or more pessimistic than it is today? And very briefly, why? So let's just go Michael, Lizzie, and Guoguang, and then we'll wrap up.
I think probably more optimistic, marginally at least. And it's probably because by that point, we may have seen the property sector repair, come a little bit further in terms of its repair job. And I think hopefully Beijing is also continuing this more proactive policy footing.
Yeah, I'm also cautiously optimistic, not because the policies announced so far and any sort of real highlights to it, but I think there's a real urgency. There's a recognition of the severity of the problem there. And once we know once the leadership realizes there's something wrong, and once they decide to pivot, they can act really fast, which is another feature of the system itself. So cautiously optimistic at this point.
I think the biggest uncertainty will come from U.S China trade war. So it depends on what kind of a tariff U.S would pose over Chinese goods. So if that's really, really harsh, I would not be so optimistic. But if that's not in that way, yeah, I agree with my colleagues.
Well, thank you all for a great discussion. And thanks to everyone in the audience for joining us. For more analysis on the two sessions and other critical issues about China, please visit the Center for China Analysis website with the Asia Society. And we hope to see you all at our next events. Goodbye. Have a good day.